Oh, what's going on, guys? Welcome into your energy news beat here on this gorgeous Wednesday, February 24th, 2021. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com. Stuart Turley, how you doing today, my man?
It's a beautiful day in the neighborhood here in an undisclosed location in Dallas.
No, we have a great show for you guys lined up. You can check all that in a bag of chips out to my left here. But first, guys, continue to subscribe. World's greatest YouTube channel, Energy News Beat. It's legit the best place for all of your daily energy finance stuff. You can also follow us on the line, as we would say if I was Vince Vaughn from what's that Google movie when he's we're gonna build an app and we're gonna put it on the line. No, you mean online. You can check us out online, www.energynewsbeat.com. Hit that notifications button in the bottom right corner. It's legit just an IV of news. We're rolling out an app here soon, so go ahead and download that. We'll keep you abreast on everything. A real interesting day in the stock market today, Stu, because we were posing really early losses. I mean, we were down as much as 0.2 of a percentage point, which isn't much, but considering top line indices are now currently trading, SPY's up 1.2 percentage point, Nasdaq's up 0.6 of a percentage point, Dow Jones up 1.4%. It's very interesting. We had Chairman Powell come out yesterday. He was before the Senate Banking Committee. Today he's before the House Financial Services Committee, and he said this. What was his quote? The quote was basically, inflation could be more volatile as the economy reopens and there increased demand, but he does not expect inflation to run hot. And he also said that we are a long way from our unemployment and inflation goals, which means they're going to continue loose monetary policy. The market turned around and continued to come off. Yields dropped right after Chairman Powell continued to downplay the threat of inflation. So that, again, everybody... they're doing all they can at the Fed to make sure this is going to happen. Higher interest. Here's Ed Klisser, chief U.S. strategist at Ned David Research. His quote is, higher interest rates could moderate broad market gains. Multiples should compress. And the last phase of early cycle themes could lead to value exerting the much-awaited leadership on growth. Bitcoin's back above 50,000. We've got about 1 million. The FDA endorsed Johnson & Johnson's single-shot COVID vaccine for emergency use. So now we've got 3 vaccines we can use. So nice. Bend over, Stu. They're coming for you. Boeing was up 7.4 percentage points. Chevron up 4 percentage points. So that's why you're seeing Dow Jones being the biggest riser today. Crude oil. Choo.
Wow.
We are up 2.5 percentage points today, 63.22. I mean, I don't have champagne, but if I did, we'd be popping it, guys. I mean, talk about a bull market, Stu. And, Brent's currently trading $67, even back end of the WTI curve, almost at $49, or excuse me, almost at $59.44. So it's unbelievable. I mean, everyone knows that I'm looking at interest rates and I'm saying, I think, I've been wrong on crude. I thought we've been overvalued since $55, and I continue to get proven wrong. I'm taking the L on this one.
I think it's ready to go back down, and I think there's a bunch going on, but there's some things showing that it's going to keep going up. So I'm going to hold until I get some more information. So I'm going to go myself in the camp of I need more data.
Yeah, no, it's going to be interesting. You're on two things. Speaking of that, Stu, you're about to be on another webinar. The gang's back in town. You, Jay Young, Ryan Ray getting together. That's going to be fun. When's that taking place?
It's actually live to Thursday.
Wow, quick turnaround. And not this coming Friday, not the next Friday, but the Friday after, we have our first webinar we are hosting. Check out the link in the bio, guys. We're going to be covering a case study that we did. Really awesome. Sign up. If you're a Colorado operator, you need to attend this because it's basically how do you use data to navigate all of these new regulations rolling out. We've got a really interesting case study we put together in conjunction with another Colorado operator. So feel free to sign up. Check that out. You can find it on LinkedIn. Go to sandstone.com/register_DI. Oil's on a tear. Natural gas, we're down about a 0.5 percentage point, really because it's that weather. It's supposed to be hot in Texas. It's actually hot here today. We've seen some of that warmer weather moving, so that's just going to unwind a lot of this natural gas stuff. XOP, Stu, E&P Securities contract, 4.5 percentage points today. We love it. 84.94 for top line index. Oilfield services even better. up 6.2 percentage points. Man, make oil and gas great again. Gotta love it. Let's go ahead and look at some of our top line indices. On the downside, there's still some. Oh no, the Chinese National Oil Corporation is down 3 percentage points. That stinks. Laredo Petroleum, they're down 5.2 percentage points, and Telranian, they're down 5.3 percentage points. Give you an idea, part of the reason why Laredo Petroleum's down, they went ahead and announced an at-the-market program to raise $75 million of liquidity. So Street didn't necessarily like the liquidity raise up front. Upside, though, we got big numbers, people. We got Battalion Oil, they're up 11%. Northern, they're up 16 percentage points. SM's up 16 percentage points. And Ring Energy, love them over there. They're up 31 percentage points. Internationally, Steve, you've got a couple stories. Aramco, they're back in the game.
I do have her coming out of the block at Aramco. We like Saudi Aramco. This is kind of giving me a little bit of a warning, Michael. They got some trouble coming up around the corner. They've got a pipeline. Multiple bids for $10 billion in a pipeline stake, and they're having to sell some of this off because they owe $70 billion, maintaining their $75 billion of annual dividend payments. So if they're trying to get rid of something that you have actually called it dead on right, which is pipeline is stuff you want to keep, kind of concerning. So just as a heads up warning, I love Saudi Aramco, but just something to watch. Okay, coming around the corner, we got our boys over in China. We love some
them
China
too?
stories. Oh yeah. When can you believe China? Here's some of the fun things. China-run state refineries, modern integrated plants embrace new Iraqi Bashara medium crude. There's a couple things that have just happened. Iraq has 3 new pipelines just came online. They are now pumping out another 590 million barrels per day.
Really? That much?
That is, yes,
Woo!
590 million barrels per day. And in this, China put on 4 new refineries in the last 4 years. They can now take this oil. And again, Iraq is also putting in more storage capacity as well, too. So very interesting stories. China, Iraq, and Iran are all getting in bed together.
Yeah, no,
Back to you.
You called it Club Med in the Mediterranean. What's this club? What are we calling this one?
Club China Sea. Club China Sea.
Club Sauna?
Club Sauna.
Club Sauna, I like that one. As always, so all those great international news stories via the world's greatest website, energynewsbeat.com. We've got 4 earnings and crude oil inventories to cover, so I'll start with crude oil inventories. Again, this is where you used to see 1.3 billion or million barrel builds, and we'd see oil tank today. Nope, 4 percentage points today, Stu. Nobody cares what's going on with crude oil inventories. We had a 1.3 million barrel build in Cushing. Here's another key number I look for: domestic production. That dropped about 1.1 million down to 9.7 million. So that's about how much Permian production's turned offline. I expected a little more, to be honest with you. I would have guessed. There would have been a little more. The reports I heard was 2 to 3 million barrels were offline. So interesting. See, this is where the reports were 2 to 3 million. You look at the numbers, it was only about 1.1. So
I even saw somebody's report said 4. So who's on second?
It's a good question. Percent utilization, not good. We went from 83 last week to 68% this week. Eek. Yikes. Now, it's due to Texas because there was a lot of refinery utilization that was off, but holy smokes. Got a little cold. Got a little cold in the Gulf Coast, Pat. A little cold. You still boiling water up there, by the way?
No, not here in Texas.
Ooh.
Yeah, they just came off a lot. Almost the whole state came off of the boil thing.
Oh.
Up in our bear country, up in Oklahoma, we never had boil.
Yeah, no, up there. So good for them. Yeah, I mean it's just I look at the way oil traded today, Stu, and it's like, does anyone care? Crude oil inventories came out. Like, it's just, I hate to use it, but it's absolutely frothy out there. Let's move over into into some earnings here. I've got four: Range, Cheniere, Western Midstream, and CDEV. Everyone's going to be up. So don't, let's just as a reminder, everybody's up today because oil did great today. So does that mean that the earnings were good? I don't know. Let's start with Range Resources. They're up 2.3 percentage points off their earnings, but they did have a miss on earnings, only reported about 2 cents per share versus the 8 cents a year beat on revenue, so that's good. It also said it reduced its outstanding debt by $86 million in 2020, making it the third consecutive year of debt reduction and totaling $1 billion since the end of 2020. So, I mean, I obviously think the street liked it a little bit. They said they're planning about $425 million capital budget, but it expects to turn sales of 59 Marcellus wells on with an average lateral length of about 12,000 feet. So, I think get some cash out of that one. So, like I said, they're up a little bit today. Street liked it. Cheniere Energy, they're only up about 0.6 of a percentage point. Quarter to fourth quarter loss, $194 million. Not good for Cheniere Energy. You'd think, we're about to cover Western Midstream. They had a great year. They had an adjusted loss of about 70 cents per share. And you adjust it for non-reoccurring costs, about 84 cents a share. It actually beat Wall Street's expectations, but just not a good year for Cheniere. They were involved, and remember, there's a lot of sub-businesses involved with this. There's a, Cheniere Energy Partners, Cheniere Midstream. So, yep. Specifically for their LNG facility, but that's what happens. You have a bad quarter, you still trade 0.3 of a percentage point on the upside. That's what helps when we've got booming oil prices. CDEV, they have a good day today. They're up 6 percentage points today. They had a 42% decline in revenue, but their $148 million of revenue did beat analyst expectations by about $8 million. So, pretty good on that point. They capped, they put CapEx for their guidance at about $260 to $310 million, depending on how things roll out. I mentioned Western Midstream. They had a really good earnings release. They reported 62 cents per share, beating the analyst consensus of 59 cents per share. Company had revenues about $647 million for the quarter, which compared to the analysts of about 655. So they missed on earnings, but beat on revenue, but beat on earnings per share. Street liked it. They're up 6.7 percentage points. In the other finance world, Matador's trading flat today. After they increased their capex yesterday, Diamondback reported no production growth. So, it's the world we live in, Stu. Oil prices go up. It's good for everybody. We miss anything today?
No idea, except I got to get a crayon and try to figure out oil pricing.
Yeah, save the crayons. I think we're good. But with that, guys, we're going to go and get out of here. Let's get back to work, finish your day. Thank you for checking us out here on the world's greatest energy news show for Stuart Turley. I'm Michael Tanner. See you guys tomorrow on the Energy Beat.